Good morning, good afternoon, good evening, no matter where you're at in the world. I want to take some time to share with many of you for the first time, and those of you um, for, I guess a reminder, especially for those of you who are already a part of the TFU movement. I want you to remember why you joined the movement, and those of you why you should join. It's because we have strategies and systems that will allow you to simplify your trading decisions and allow you to enter trades based on decisions. So what I'm about to do is I'm going to remove a lot of noise here. So show you guys something here. I'm going to get rid of these here. Actually, let me remove that there because you need that one. All right. The other line that I just had was more of a trend line. And when you're trading harmonics, in my opinion, you don't need a trend line because harmonics are more reversal patterns and retracements used off of Fibonacci's and that draw those reversal or pullbacks or retracement setups. So really, what all I use is this one line here. That's more of my trigger line. That's the line that I use to make my decision. You guys see this little white line at the top. These are take profit targets that I use. This is a channel system that we use, but I use this off the harmonics, and I use them as take profit targets. Okay, you guys will hear me reference TP borders. There's a 1, and then there's a 2. 2 low, 1 and 2, and then 1 and 2 high. So based on when you guys are looking to take the trade, whether it's a buy or sell. So channel up top is the high take profit. The purple is always the original target. So how do you trade the TFU harmonic system? Guys, we have a harmonic scanner that you will have access to that will be on your chart, and it will be drawing a pattern. So it's not I wouldn't call it an actual scanner that you're used to from some of the previous companies like IML or some of the other scanners that actually do a scan of the market. This is actually a harmonic pattern that is on your system, and as a pattern is formed, it would automatically populate itself on your computer. You also have it where you can send yourself an alert when the harmonic pattern pops up. So to me, it's still like a scanner. As long as you have your system open, you can have different pairs open here at the bottom. So what I do is I open up all the pairs I want the harmonics to pop up on, and when they do, it'll send me a text message to my phone. Okay, so that's how you get that. So when you get the harmonic pattern, guys, it's still the original way of taking a trade. We're all about 3 questions. Remember, TFU is not about the long game. Though we have strategies that allow you to trade longer, we're about good entry. That's all the system is about, is trying to find the best entry and using symbols, lines, colors, and arrows to make that decision for you. So as you can see, I got a harmonic, harmonic pattern. My orange represents the sell. This Dodger blue represents my buy. So whenever I see the color, I don't even need to know where the D is because I know I'm just looking for the tip. The tip is always the representation of the D, and if you look behind there closely, there's a D. D will always be at the top for the sell. D is always at the bottom for the buy. So in this setup, I got my exhausted semaphore. I got my D here at the top. And now the first thing I look for before I take the trade is how far, once this thing triggers, is my first TP border. All right, this is CAD JPY, so it's a slower pair. Let's go to a pair that I trade. Let me just stop playing. I'm a GBP trader, so let's trade GBP. All right, for those of you who are watching this video, the market is closed, but I'm already expecting a bullish harmonic to take place for GA. I already sent this signal out to the team, so having them to keep their eyes on this particular pair. So GA, EA also has a harmonic forming, and EN already got the harmonic is running before the market closed. All right, so let me talk about it, why we took this trade. There's your harmonic pattern. It's blue. The D is at the bottom. It's on a level 3 semaphore. We already got my thumbs up to close. That's question number 1. Did the candle close showing the thumbs up? Yes. Question number 2, did my safe zone arrow appear and did the candle close showing the safe zone arrow? Yes. Step number 3, is my trigger line, did it change from a bearish trigger line to a bullish trigger line? Yes. We would have took the trade right here. All right. Oh, before you do that, you want to measure the distance of your first take profit. If your take profit is like so close to when you're about to enter that trade, I actually personally forego that trade because I think that it's going to just touch it real quick and then pull back the other way. Remember, harmonics are typically reversal. That's your best thing. If it reverses, that's the best thing you want. Or it could be a quick retracement to a certain point and then pushes back down. So don't ever fall in love long distance for harmonics. All right. I do use these TP borders as ways to give myself opportunities to enter a trade. So let me show you how I do this. I enter the trade off of my 3 questions. Yes, 1 question. Yes, 2 question. Trigger line change from bearish to bullish. Yes, I take the trade right there. Typically, what I'll do is I'll take 2 positions. Now, I'm not telling you to do this, but I'll take 2 positions. And after I measure my distance of my TP, if it's at least 15 to 20 pips, I'm taking that trade. All right. And as I can see here, it's 34 pips to TP border. So I'm always, if it's 34, I go 3 pips under it, and I'll go 30. All right. So that will be my take profit for my first position right here. And then what I'll do is I'll take a second position. But my second position take profit would be at the higher TP border. All right. So again, about 3 pips away from it. About right there. All right. So I'm in this trade. First position, looking to come and take this, touch this TP border, giving me my first take profit. When that happens, I am looking to move, since I already measured. This is another reason why you measure. I measure my TP border, and I make them, that's where my trail will take place. All right, I want to say that again. When I enter the trade, because I've taken 2 positions. Now, if you're only taking 1 position, this does not matter. Just go to the first take profit target, not the second. You want to secure the win. Majority of the trades come here. They do go here sometimes, but your percentage of it going to this first take profit area is extremely high. So when you enter the trade, set your take profit. I always come about 3-4 pips below it just to give myself breathing room, because if the wick touches it and you got take profit right on there, based on the spread, you may not get taken out of that trade. It may look like you should have, but you didn't. That's why I always go 3 pips below the take profit, so I know that I'll hit my take profit. Now, if you are taking 2 positions, so let me put the second position. I'm going to change the color here real quick. Make it blue. All right, so here's my second entry, right? Second entry, boom. Take that trade. So what I'm going to do is I'm going to set my take profit. All right, we're going to use this one here. This is your stop loss. My second position, my take profit is going to be there. We're going to use this as a stop loss. So let me turn it red. All right, so now first position is green, take profit is here. I took a second position also when I entered that trade. All right, moved up, took my second position, and my TP border is going to be here. So what happens is I'll already know the distance from my entry to my take profit is what? 32 pips. All right, so what I'll do is I'll go from here to this first take profit, and I'll give myself a 30 pip trail on the second position. No trail on the first position because I want the first position to take itself out at that first take profit. But the second position also will be at this level, but I'm going to put a trail on it. Why? Because I want the second position to go up here. So worst case scenario is first position comes to the TP border, boom, take itself out. Second position is up here now. I want this to have a 30 pip trail. So now my stop loss, which was here, 30 pips, will now come here to break even on the second position. And with the second position running, now I'm looking to just let it ride to the next TP level, or worst case scenario, break even. Because I was in one trade, got my pips, hit take profit, had my second position for extra pips, or it comes back and it breaks even. Hope that makes sense to you guys. If you're only doing one position, do not even worry about the second part of that statement that I was making about going to the second TP border. But if you are taking two positions, when you take a trade, set one for the take profit, then set the other one to trail it from the level of your first take profit. You enter here, measure, okay, that's 28, 30 pips. You set a trail, set your trail for 30 pip trail, which will be 300 points, because trailing stops work as points. So 300 points. First position is secured in the bank. Second position is up here somewhere. You're looking for it to continue to ride up here. But as long as it doesn't pull back, you can't lose. You can only break even. So now your second position is literally in a risk-free trade. Your first position that you're actually compounding is in the bag. So now you can only get better. You can't get worse once you do that. But ladies and gentlemen, this is why people should take a serious look at the harmonics. Now, let me show you something of why you want to not take all the harmonics. So take a look at this one. As soon as I saw this harmonic forming, the first thing I'm looking at is, where is my TP border? Where is my first take profit? My first take profit is way up here at the D. So I'm already not excited about this trade. So for me, I'm not taking the trade. Why? Because I want my TP line to be below my trigger line. You see out here? I want, because my this is a buy, I need my take profit line to be above my trigger line. Look, this is a sale. My TP take profit needs to be down here below the trigger line, not above it. So with it being above, I'm avoiding this trade altogether. Let's look at another one. Here's another harmonic right here. All right, the question is, now, I still would have probably avoided this one. This is just me. I look at this trade, and yes, it's a little above it, but no, really, it's too close. So for me, that's a trade here that I may just would have avoided. Some of you guys would have took it. Hey, you can. It actually went to the second take profit. It was already on the first one. It broke through the first one before you even took the trade. You would have took the trade here, and it went to the second. All right, let's look at another one. It's a little junky up in here. But here's one right here. There's a D there. There's your take profit 1. There's your take profit 2. So I would have took this trade. First trade was a real short one, a small one. And then the second one, if you'd have had a second one, that's where you really would have caught your pips right there in your second trade. So let me go back to my GBPs because y'all know I go off of volume. All right, let's back up again. Here we go, here we go, here we go. Let's see if we can find us a good harmonic pair trade here. There's one right here. This would have been a D because the D is always at the bottom. First thing you check is my take profit because I'm looking for a buy. My take profit needs to be above my trigger line. Yep. All right. Wait for my thumbs to close. Yes. Safe zone close. Yes. I do a quick measure. Make sure the candle that I'm finna take the trade on is less than 20 pips. It is. I would do a market execution right here. I had a small pullback of about 13 pips. My take profit is at 20. How many pips is that? 20. Right on it is 29. So I come down 26. I want 3 pips. 26 right there. So if I was taking a second position, let me show you what right here. If I take a second position, first position, as you guys can see, was hit right here. We took it. Would have got your 26 pips. Now my second position, I would have had a trail because I'm going for extra because I'm trying to go to the second take profit. But look what happened. Price came up and it came all the way back down to my entry point. So instead of having 2 positions at 26 pips, I only end up with 1 position at 26 pips. No harm, no foul, because the second position was just the extra trying to go to the second take profit. As you can see, it came back and tested again, but eventually it did make it to where the top of the TP border. But it definitely went in. Now, if you'd have just stayed at your stop loss, you probably would have hit it. So that's an opportunity too. But I don't like to give up profits that I already had in the bag. As long as I'm still trading it, it's not secured money until I secure it. So I would take the chances of it not coming back down, retracing, and hitting my entry point. But because my true stop loss would have been down here, it would have took several hours, but it would have made it to the second take profit. All right, let's go to another one. Let's look at this one right here. There would have been a D here. Got your semaphore, thumbs up, everything happened there. You measure your candle, or first of all, you make sure your take profit is above your trigger. It is. You measure your candle is more than 20 pips. You wait for the pullback. Don't take it. Market execution if it's above 20 pips on the candle that gave you all your conditions to enter. You catch it on the pullback. As soon as you see a wick, after it pulls back, wick, take the trade, set your stop loss, and then your take profit is right here. Come as 20 pips, come back down 3. So I'm going to take me a 17 pip take profit on the first one. And then again, set the second one. As you guys can see, it's still retracing back. So they don't always work, but if you just don't do that, now again, you do not have to set a trail. You can actually keep it at your stop loss because eventually the market makes it to the top take profit. So if you want to go long, just remember on your second position, you can even take this route. Win the first one and be willing to come back to what they call par. Because if market comes back and takes out your second position, all you're losing is your original winning position that you had. And most likely, you're probably going to win both trades. So I'm going to try both. I'm going to try without a trail, and then I'm going to try with a trail, and I'll see what will happen. So just wanted to let you guys know how to actually trade this and, the excitement of doing it. Get back to what originally works, guys. These harmonics are powerful. Yes, they're not attractive like you like them. Yes, they take a while to develop, but you don't have to do any homework. You don't have to do any analysis. All you simply have to do is when the harmonic patterns form, wait. First, check your take profit level. Make sure your purple line, if you're looking for a sale, needs to be below your trigger line, and then it's supposed to be above if you're looking for a buy. Find your D, thumbs down, question number 1, close of the candle, safe zone, down, close of the candle, trigger line changing from bullish to bearish, take your trade. After you take your trade, look for, measure your TP. This case is 45. I always go 3 back, 45, 44, 43. So you can go 43, 42 is your take profit. And then, of course, if you guys want to, then you get the second position in there as well. And typically, it will set it for your take profit too. And don't do it down here. So it's from where you enter. So when you enter your take profit 2, just go down straight in a line. Don't try to do it in an angle. It's easy for you to do that in an angle because you're looking at it. But from when you enter the trade, just go straight down. All right, there's my take 95. So let's go 3 pips above 95, whatever, 92. And there is your profit. And then if you draw the line right there, you can see that's where your take profit would have been. Slide it over, boom. It would have hit your second one as well. That's just an ideal, ladies and gentlemen. You do not have to do it, but it is an ideal. All right, here's one that would have probably hurt you on the second position, but you would definitely won the first one. You enter the trade here, right? So when you enter, you just go straight up. Don't go in an angle. Go straight up. Straight up, there's 40 pips right there in that trade. So you're going to come down, or 37. So I'm going to come, or 36, come down to 33. I give it 3 pips, 33. Right there, that's my trade. Right there, that's my take profit. As you can see, it took it a while from your entry point, which is right here. You did not hit your stop loss. It came down as much as 21 pips on this stop hunt. You did not hit your 30 pips, which is right here. All right, you have your take profit set. Line here, you go over. Gave you a little scare for a while, but you never hit your take profit, or hit your stop loss. Came all the way up and hit your original take profit. But if you had your second position, also, you would have found yourself, as you see the market, only did a pullback, because that's mostly what harmonics are, a pullback. It was not a full reversal. And therefore, that's why you did not get it going up to the top part. It actually peeled down from where you would have entered here, on this candle here. Yes, you would have lost that second position. So this is why if you were just trying to run it all the way up to take profit without the trail, you would have found yourself now, instead of just breaking even on the second position and keeping that first trade of 30-some pips, you now would have lost those 30-some pips, and you would have literally be like the trade never happened. So I'm saying definitely go for the safe route, but you can trade however you want. All right, here's another one here. Another sale. TP borders definitely below your trigger line. And you answer the questions. Thumbs down is right here. Close, safe zone, close. All right. Measure your take profit 1. Go from, as soon as you enter, just go straight down. Stop. Don't go in an angle. You don't know that. So just go straight down to the TP border. Boom. There it is. 61 pips. I'm liking that. Come out 3. So make it, 58 or whatever, 57, however you want to call it. There's your TP border, or that's your take profit right there. Let's call it right there. And this, you see what the market did right here on this candle, broke through, hit your take profit. Now, if you had your second position running from where you would have entered this trade, this is one that you would actually won because you would have won second position. You go straight down to your take profit, which was 127 pips for your second position. And if you did three, it would have been somewhere in here. Just go over here and you can clearly see you would have hit that as well. So sometimes they work, sometimes you'll break even, but when it does go to the second take profit, man, you're going to be glad that you did. Ladies and gentlemen, you want to be a part of what we have, click the link, get access to what we have. This is just one of several strategies that we have that is helping people to not have to know a lot about trading, but yet be a lot to really see a lot of success. If you're already on the team, I encourage you to use this as one of your trading deals. Get back to this. This works. Yes, it's a little patience that has to be there, but the patience is well worth it. Trust me. Take profit 1, take profit 2 for the buy, take profit 1, take profit 2 for the sale. All right, guys, make it a great one. Sorry that I was so long, but I hope this one is some good training for you. And for those who are looking at it for the first time, it will be something that you want to be a part of. We are working on some really cool tools that we will be releasing real soon that help your trading experience even more. Thanks for watching this video, and everyone have a great day.